In this video, I'm going to show you why the forex market has to move in an uptrend, why it has to consolidate, and why it has to move in a downtrend. And this is very important because not only would you be able to build trust in what the forex market does, but you also be able to solve two of the most serious psychological problems that is faced by forex traders, which is fear and hesitation. So make sure you stick to the end because this is going to be an eye-opener for you. So before you begin, let's quickly clear this. Now, let's take a look at the right side of the chart and let's see what is going on over here. Now, each and every price point you are seeing here are called levels of price, okay? So this is a level of price. This is a level of price, okay? Now, why is this important? It is very important because at each and every level of price, there are certain amount of people who either want to buy positions or who want to sell positions, okay? So at each and every level of price, there are people who want to buy more positions or who want to get out of trades, okay? Now, for the sake of this example, I'm going to be using just 5 levels of price. So 5 levels of price. Now, while I'm picking these levels of price, it is very important that we know who moves the forex market, because if you want to know why the forex market moves in the ways that it does, you need to know who moves it in the first place. If you know who moves the forex market, you can put it in the comments. You have 3 seconds to put it in the comments. So for those of you who don't know who moves the forex market, okay, so the individuals that move the forex market are the banks and then the liquidity providers, okay, so they are called smart money, okay. Now, why are they very important? They are very important because they have billions of dollars to trade with, okay. They have billions of dollars to trade with. That is why they are very important. So we cannot fight against them, but rather we have to move with them. And this brings us to here. So let's say it's Monday, okay, it's Monday, and then everyone is preparing to buy positions. Now, at this point, smart money will also be preparing to buy positions, okay. So let's say they want to buy 50,000 positions on Monday and then sell all the 50,000 positions later on in a week, or maybe the next week, or anytime they want, okay. So the most important thing here is that they want to buy what? 50,000 positions. So 50,000 positions, okay. So you want to buy 50,000 positions. Now, remember I told you that at each and every level of price, there are certain amounts of buyers or sellers. But for the sake of this example, I'm going to be using sellers, okay. So let's say there are 10,000 sellers sitting at this point. 10,000 sellers sitting at this point. And each of these 10,000 sellers, or each of these 10,000 sellers, have one position to sell, okay. So meaning that at this level there are 10,000 positions here, okay. So equals 10,000 positions, okay. So 10,000 positions. Now let's say at the next level of price there are also only 10,000 positions, or 10,000 sellers, okay. 10,000 positions at the next level, 10,000 positions, and also at the last level there are 10,000 positions or 10,000 sellers, okay. So we have 5 levels. So on Monday, okay, let's say smart money comes to the market and they want to buy 50,000 positions, okay. So they have to make the price, or they have to engineer price to go to this level, okay, so that they will get those 10,000 positions, or price has to go to this level of sellers. So let's say it has come here, okay, and they've bought their 10,000 positions, meaning that they will have 40,000 positions left to buy, right? Yes. Then market has to go to the next level of sellers to get more positions. So if you want to buy 10,000 iPhones and the first shop has just 5,000, you have to move to the next shop to get the next 5,000, okay. So simply that is what the market has to do. So the market moves to the next level and they buy another 10,000 positions, meaning that they have 30,000 left to buy, and the market has to move to the next and the next, and at this point they would have bought 40,000 positions, okay, which means that they have how many left to buy? 10,000, okay. You have 10,000 left to buy, 10,000. Then finally the market comes to the last level, and then smart money buys all their 50,000 positions, which means that they have 0 positions left to buy at this point, okay. They bought all their positions. Now look at what happened to price here. You can see that price spiked up a lot, and if this was a candlestick, it would have looked like this. So imagine a candlestick jumping straight from 83,000. So a candlestick jumping from 83,000 to 90 5,000. This is going to be a lot of money for retail traders. But for smart money, this is a very bad thing to occur, or this is bad news, okay? And I'm going to show you why. Now you can see that at each and every level, as you were going up, the positions were getting more expensive. Have you seen that? So here, the position costs 84,000, okay? But here, they cost $87,000, okay? So this is US dollar Bitcoin. So means that the position costs $87,000, okay? And at this point, the position cost $89,000. Same 10,000 positions, but the price kept getting higher and higher. At this point, the position cost 92,000. And finally, at this point, the same 10,000 positions cost what? 94,000, which means that smart money was buying the positions at a more expensive price after each and every price increase. And this is very bad news. I don't think you would want that to happen to you in real life. And this is what smart money don't want, okay? So they have to look for a smarter way of buying. So they have to make sure that they engineer price and keep it within this range before they buy all their positions. Now, keeping the positions here automatically doesn't mean that they can buy all their 10,000 positions or their 50,000 positions here. But I'm going to show you how they do that. So when they keep the market moving in just these two ranges, okay, they're going to manipulate us into thinking that this market is going to move down from here, okay? And sometimes you're going to be seeing that price is breaking to the downside here, okay? So they are going to do everything they can to manipulate us into thinking that the market is going to move down from here. And so you're going to be seeing huge bearish candlesticks. You're going to be seeing huge red candles that look like this. And they look like this market is going to push down, okay? And then you're going to see price break to the downside and create a lower high here, okay? So this shows us that the price might move down. So you can see that people will start selling their positions. So instead of smart money to buy positions at each and every level, they are going to manipulate all of us into thinking that price is going to sell from here. So you can see that we have been manipulated by smart money to buy all the positions at this level, okay? Then at this point, they would have bought all their 50,000 positions right here, cheaper than they would have done if they did it the other way around, okay? So which means that at this point, they have 50,000 positions. Now, you can see that there are no more sellers at each and every level because they have manipulated all the sellers to come and sell their positions here, which means that there's no one left to keep price from moving up, right? So let's say, for you to understand this, let me use tomato, okay? So let's say there are only 5 tomatoes left in this world, okay? 5 tomatoes. All the other tomatoes have gone extinct. So there are only 5 tomatoes left. What do you think will happen to the price of these 5 tomatoes? Each of them will be sold for at least $1 billion, okay? Because this is the only 5 tomatoes. And nobody will be allowed to eat them to be a sacred something. So this also happens for oil prices, okay? Have you realized that whenever there's no oil, the price of oil moves up. But when there's oil, the price of oil moves down, right? So it's the same thing here. So you can see that because they've bought all the positions, right? There's no more positions left, or supply is very low, but demand has automatically turned high here, okay? So people want to buy Bitcoin, but smart money has bought all the Bitcoin. So the price of this Bitcoin is going to move up. So any buying that occurs, you can see that people will start bidding for high prices, okay? That is what happens at auctions. So the price of this will automatically start moving up. And this is how the uptrend is created, okay? So smart money is going to start selling some of their positions, and this is what causes the pullback, okay? They are going to start taking profits, okay? Then they will buy more positions here, and they will send the market up, then they'll start selling some, they'll buy more positions here. This is where retail traders also buy their positions from. You can see that retail traders also are involved in the movement of price upward because there's no more supply, which means that the price can easily move up, okay? So now let's say they've gotten to this point, okay, and they are tired of making money, okay? They've made too much money, and then they want to sell all the 50,000 positions that they bought from here, okay? So they are tired of making money, and then they want to sell all the 50,000 positions. Now, if they want to sell these 50,000 positions, okay, so 50,000 positions, they have to sell to who? To buyers, right? If they want to sell their 50,000 positions, they have to sell to people who are buying. So the same way we did for the previous illustration let's put buyers now instead of sellers. So let's say at this point there are 10,000 what buyers sitting here. Okay, pay attention very well because this is going to blow your mind. So at this level there are 10,000 buyers. At this level there are also 10,000 buyers. Okay, oops. At this level there are also 10,000 buyers. Then at this level there are 10,000 buyers. Okay. Then at these last two levels there are also 10,000 what buyers. Okay. So how many buyers in total? 50,000 buyers. So let's say you can see that as the market is going up, people are thinking this uptrend is going to continue going up, because remember, we don't know when the uptrend will end. We are just taking parts in the uptrend so that we can make money. Now at this point, people want to get into the uptrend, but they don't know that smart money, they are tired of making so much money and they want to sell their positions. Now what happens is that if they sell all their positions here, the same thing that happened down here is going to happen. So price has to move to this level of buyers and then come and buy, or they will sell these positions to this level of buyers first. Okay, and then price has to come to the next level so that they'll sell to this level of buyers. So at this point they would have sold again, they would have sold 20,000, so they will have 30,000 left to sell. Can you see that? So 30,000 left to sell. Then price has to move to the next level of buyers so that they can sell more positions. Okay, so at this point they would have sold 30,000 and they would have been left with 20,000 more to sell. Okay, and then price will come down to this level and then finally to the last level. And at this point, smart money would have sold about all their 50,000 positions, which means that they will have 0 positions left to sell. Okay, now you can see what happened here. You can see that they almost lost all the money that they made from here, because the price of the Bitcoin was getting cheaper as we were going down, which means that they sold the same 10,000 positions to the same people, but cheaper and cheaper and cheaper and cheaper. So let's say you have 10 Lamborghinis, okay, and you keep selling each Lamborghini at maybe $20,000 cheaper. You're going to lose a lot of money. Okay, so smart money doesn't want that. So you can see that this market crashed a lot and they don't want that to happen. So they have to again look for another smart way of selling this 10,000 or 50,000 positions that they bought previously. So let's go back 50,000 positions, right? So they have to keep price here, and while they are keeping price here, they have to make it look like it is going to move up. So sometimes you're going to be seeing this breaking to the upside a little bit, but it's making equal highs and equal lows, and then you're going to be seeing huge bullish candlesticks. Okay, huge green candlesticks, and people, because we trade out of FOMO and out of emotions, people will think that it is going to move up. I think some of us are falling prey to this. Then we just buy the positions only to get smoked out later on, right? So look at this, get smoked out here. So these are the first level of people who are going to be cleared out, or these are the first level of buyers who are going to be cleared out, those who bought from here. Okay, those who bought from here. Then when price clears these people, remember, they are manipulating us to think that they are going to sell all their positions here. So they are manipulating us to think the market is going to push up from here so that they can sell all their positions here. And at this point, they will have nothing left. Then they are going to push the markets down by shorting the markets, creating lower highs and lower lows. And this is where retail traders also benefit from, by also shorting the market. Then when they are done, they repeat this process over and over and over again. So now that you know why the Forex market has to move the way it does, I think you should have developed a lot of patience by now. You see, but here's the catch. Because this is the only thing that happens in the Forex market, smart money has to make it look different most of the times. Because if it doesn't look different, then everyone will know what is going on in the Forex market at each and every time, which means that smart money cannot manipulate anyone. So in the next video, I'm going to be showing you real life practical examples of how these illustrations look like, so that you'll be able to capitalize on them on your own and make yourself some profit. So if you got a lot of value from this, make sure you hit that subscribe button and make sure you like this video and share to people who always get manipulated in the Forex market. See you in the next one.